Monday, November 2nd, 2020, Maneco 64, home of alternative economics and contrarian views. So it's tough not to focus on the election tomorrow and the aftermath of the election. So I like to say that no matter who wins, the red ink will keep flowing. The government spending, the deficits, the debt, they'll keep increasing while the currency will keep decreasing in value. We're going to continue to see a debasement of the dollar, debasement of the pound, of the euro, all fiat currencies. And that's why I think people need to focus on their own situation, continue to be their own central banker, as Jim Sinclair once said. He was the original who said that, Jim Sinclair, not other people, not me. What does that mean, being your own central banker? Well, it's being your own bank, not depending on the banks or on this financial system, being outside this fiat currency system as much as possible, getting out of debt, trying to stack precious metals, gold and silver, living your life in an honest way, in an honest economic way. After all, in Greek, economy means your household, keeping your household in order. So we don't want to keep our household like Uncle Sam or like John Bull here in the UK. It's going to get worse and worse because they've kind of killed the confidence in the economy, at least here in Europe, and they're going to have to inject more and more funny money, more red ink into the system. And no matter who wins in the US, we're going to see that, yes, there might be a difference in the speed of how it happens. If, for example, we have a Biden victory and a blue state wave in Congress, we could see deficits balloon even more. Not that it hasn't ballooned under Trump. Even before the crisis this year, I kept saying the U.S. economy isn't doing that great because it's running a 5% deficit. The federal government was running a 5% deficit even prior to this crisis. So it was all artificial. And we had a bounce of 33% in the GDP, or 31%, I forgot. But it's an anomaly because prior to that, you had a drop of about 30. So don't buy into this idea that the U.S. economy is going to do great next year. Unfortunately, for the economies to become sustainable and strong in the longer term, we have to take the hit. We have to let things correct. We have to see bankruptcies. We have to see failures. And since '08, it seems, or even before '08, it seems like that's not something that the powers to be want to let to happen. So eventually, Mother Nature will take its course, and the correction, the depression, will be much worse than it should have been, only because we've delayed the event, so to speak. So yes, there are, of course, conflicting opinions on who's going to win. You read the mainstream media, they're focusing on Biden, that he's got the upper hand, even though it's getting pretty close, even for them. And then you look at Zero Hedge. The top article here says, Nate Silver hedges on Biden win after Trump draws mega crowds in Pennsylvania. So there you go. So I think no matter what happens tomorrow, there's going to be a lot of disappointed people on either side. And that could be dangerous in terms of the social peace in the United States. We have to wait and see. And we might have to wait a long time also to find out who the winner is. That's one of the problems as well that we could face. But if there were to be a landslide by either side, I think that could give the markets a little bit of a boost. because markets hate uncertainty. So there you go. With that, let's look at where the markets are this morning. Here in London, it's about 8:45 a.m. We've got spot gold at 1882.50, up just over $3. The high has been 1887. The low has been 1873. So gold is pretty steady this morning. Silver is outperforming. Silver is up 0.75% or 18 cents at 23.81. It has been as high as 24.05. The Dow future is up 50. I think it was down about 150 early on overnight. Right now is at 26,550. That 26,500 level is a key support. We saw on Friday a big rally in the last 10 minutes to close above that level. The S&P is up 7 points at 3281, up 0.25%. NASDAQ 100 future up 34 or 1/3% at 11,103. The currencies, we're seeing sterling weaken quite a bit, 128.60. That's down 2/3%. As for the lockdown here, it's supposed to start on Thursday, but I'm reading that there's a lot of opposition within the Conservative Party to another lockdown. So they're still going to have to vote for it in Parliament on Wednesday. So who knows? We might not even have this lockdown. Maybe the MPs are growing some cojones, as it's called. So the euro, 116.24, down 0.2%, and the dollar is up 0.25% versus the yen at 104.95. So gold and silver are holding on quite well despite a little bit of dollar strength here this morning, which is encouraging. Crude oil is down 3%, over $1 at 34.72. I would say that's not a great signal for the overall economy and the strength of the stock market. But again, we could see a deluge of money printing and fiscal spending coming very soon. So maybe that's why the stock markets are holding on, but I expect to see a lot of volatility in the stock markets. By the time you watch this video, for example, after I've uploaded it, we could see the Dow be up 300 or down 300. That's the kind of volatility we should be seeing in the next few days, in my opinion. So to finish off, let's quickly look at the bond market. The 10-year yield is at 0.87, so slightly higher. It hasn't really moved that much, a very narrow range overnight. And I think, again, we need to keep a close eye on the 10-year yield. I'm going to put the page where you can watch that below in the description if you don't know where to look at the 10-year yield. And the higher that goes, the worse it is for everything, for the financial markets, I would say. The more volatility and choppiness we should continue to see if 10-year yield keeps going up, or even if it's moving sharply up and down in the wide range or volatility, that's not going to be good either. So where's Billy this morning? Well, I nudged him this morning when I got up, but he didn't feel like getting up, so I just left him. He worked hard last night during the live stream, 1 hour long live stream, so I left him, but he'll be back. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And also make sure you hit the little notification bell to be notified of all my new videos. And you can also follow me on Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.